All right, everybody, it's Friday, and I hope you are ready to have a good week and hope you had a good week. Investing is fun, and we should have fun with it. Today, we're talking about Meta's earnings. I'm going to talk about some things that the headlines don't cover. We know the revenue numbers. We know they missed on revenue. We know they missed on EPS. We know that the advertising industry is tough. But I'm going to cover what Mark Zuckerberg and the management team said on the earnings call that leads me to believe that my bullish thesis on the stock is right. We are building a $10,000 to $1 million portfolio right here on YouTube. If you've watched the videos, you've seen this. We started at $10,000 on February 15th, 2022. We're at 75,274. So we're down 6,700 total. And we put about $82,000 in. We are up $1,100 on the day. We are up $1,000 on the week. So it was a good week, even though Meta was down 7% this week, and we just made it a big position this week. So there's the portfolio. If you like this transparency, do me a favor and like the video, subscribe to the channel so you never miss an update, and that helps more people find us. You've likely seen these numbers by now. Meta reported a drop in total revenue from 2021, about a 1% drop, an increase in total expenses by 22%, a decrease in income from operations by 32%, a 36% decrease in net income, and a 32% decrease in earnings per share. That's all bad, but we talked about some of the known headwinds in advertising. We have inflation going up, we have all the macro unknowns, and so businesses are just cutting ad budgets. Meta is gonna be okay, and then their expenses are up because they're investing in the future. They're investing in the metaverse, they're investing to stay ahead of the competition. What I want to get into is some of these highlights from the earnings call transcript. This shows that they are confident in the business and they are all in on the metaverse, and that's a bet I think is a good bet, and it's gonna pay off over time. So first up, Zuckerberg said Facebook daily active continues to grow, including in the US, although they saw an expected decline in monthly actives due to internet blocks related to the war in Ukraine. Makes sense. Engagement trends on Facebook have generally been stronger than anticipated, and strong Reels growth is continuing to drive engagement across Facebook and Instagram. That said, we seem to have entered an economic downturn that will have a broad impact on the digital advertising business. They are focused on long-term investments that'll position them to be stronger coming out of the downturn, including the work on Discovery Engine and Reels, new ads infrastructure in the metaverse. They're also focused on being rigorous about measuring returns and sizing these investments correctly. So there you go. Those are the priorities: Reels, AI, the metaverse, and then cutting costs. Okay, and here's a quick highlight about Reels. Last quarter, Reels already made up 20% of the time that people spend on Instagram. This quarter, we saw a more than 30% increase in the time that people spent engaging with Reels across Facebook and Instagram. AI advances are driving a lot of these improvements, and one example is that after launching a new large AI model for recommendations, we saw a 15% in watch time in the Reels video player on Facebook alone. Okay, and here are some of those challenges that I previously talked about how Reels doesn't monetize quite as well. One near-term challenge is the growth of short-form video. Reels doesn't yet monetize at the same rate as feed or stories. So in the near term, the faster that Reels grows, the more revenue that actually displaces from higher monetizing surfaces. Now, in theory, we could mitigate the short-term headwind by pushing less hard on growing Reels. But that would be worse for our products and business longer term, since we're confident that Reels will grow engagement overall and quality and will eventually monetize closer to feed. So there you go. That's the impact, the negative impact that Reels is having over the short term that should level out. Talked about the signal loss from Apple's iOS changes. And they also talked about some important changes in efforts they're making in click to ads in messaging. So for example, click to messaging as part of our business messaging strategy that's grown quickly, with 40% of advertisers already using that format. And I love this long-term mindset. If we invest in building the new infrastructure that we need, then we're going to come out of this downturn with even more superior ad products and a meaningful technology advantage over other industry players. That is my belief. It's going to be a tough period, but Facebook, Meta, in my opinion, is going to come out stronger than their peers. In the last recession, we invested in our ads business through the downturn and came out stronger on the other side. I'm focused on making sure that we do the same today. If you think about leaders who have been through this and been around a while, it's tough to find another founder leader that's been around as long as Zuckerberg and has proven themselves as much as Zuckerberg has. Talked about the metaverse. It's a massive opportunity for a number of reasons. Most importantly, it enables deeper social experiences. I feel even more strongly now that developing these platforms will unlock hundreds of billions of dollars, if not trillions over time. He is all in on the metaverse. So a couple big milestones coming up. They're expanding Horizon, which is their social metaverse platform, and the continued improvement of the avatars platform. This is huge in my opinion. We're going to be launching a web version of Horizon that will be accessible on all platforms later this year, which should dramatically increase the number of people who can use Horizon. And we also just launched our avatar store with digital clothes from leading fashion houses. On the hardware front, later this year, we'll release Project Cambria. And the experience here is getting pretty awesome. It'll be a high-end device focused on professional users and work with high-resolution color mixed reality. There's just one milestone in the long-term path, but I think it's going to be people are going to be pretty blown away by it. Last thing, they talked about share buybacks a little bit. They've got a substantial amount remaining, their CFO said, and then they expect to continue to have buybacks as part of the capital allocation, meaning they're going to get another approval for more buybacks in future years. All right, so there you have it. There's some context and some things that Zuckerberg and the management team said during the earnings call that you really don't see covered on other YouTube channels. So quick look just at valuation. You know, Facebook is trading, Meta is trading lower than it almost ever has in terms of PE ratio. It's down to a 13. If you look forward, analysts are expecting 1% growth essentially over the next 3 years because they're expecting minus 27% for 2022, 12.65% in 2023, and then 19% in 2024. And so if you look, they had $13.77 in earnings in 2021, and they're not expected to even surpass that by analysts in 2024. Talk about low expectations. So right now it's at a blended PE of 13.82. If it just stays at 13.7 for the next 3 years, you're looking at a 6% annualized return. If they're able to jump it back up to something that's still totally normal, 17 over the next 3 years, you're looking at an annualized return of 16% for a total return of 43%. I like that risk reward. I've shown you this before. This is Everything Money. They've got this software where you can look at kind of the 8 pillars of the business. These are just high quality marks that they screen for. It's things like a PE ratio under 22. And I covered these in my last video, so look it up. But 8 green marks. So they like the PE, high return on invested capital. They've got revenue growth over the last 5 years, net income growth over the last 5 years, reducing the shares outstanding. They're going to continue doing that. Long-term liabilities divided by 5-year free cash flow of under 5, meaning they can easily handle their debt with free cash flow. Cash flow growth over the 5 years is positive, and then 5-year price to free cash flow under 22, it's at 17.9. So let's just run it through a quick analysis and come up with 3 assumptions of price targets. Looking out 10 years, I put in a low, a medium, and a high scenario. Low, 7% revenue growth. Medium, 11% revenue growth. High, 15% revenue growth. Profit margin, pretty much in line with what it has been historically, but a little bit, lower, up to the max of 31, which is still below its 10-year average. Free cash flow, same deal, kept it low. PE, it's sitting at 11.67 right now, so I kept the low at 12, the mid at 15, and a high at 18 in case that thing gets back up there somehow. And then a price of free cash flow, 11, 14, and 17. Desired annual return, 13%. To analyze and see what comes out. There you have it. You see the numbers. Even on the low scenario, this thing is still coming out as a buy. And then if you look at medium and high, it could be a significant buy. That means it could be significantly undervalued. This is not saying everyone should go out and buy the stock. You should always do your own research. But I shared that I have a position in Meta. It's one of my largest positions, and this is why. I believe in the metaverse. I believe in the investments they're making, and I believe that they have a very strong balance sheet and a strong user base that they're going to be able to leverage for years to come and make this transition to the next platform of the future, which I think is going to be the metaverse.